How would you like to save $150, $350, $792, maybe as much as $1,453 per month on your mortgage payment? What would you do with this extra money? You could certainly pay down some other debt and maybe even get a new car. Each of these clips are actual pieces of documents we sent to our clients this month. Do you qualify for these savings? Would you be interested in these benefits? Hi, this is Ron Siegel. I'm not sure if you qualify for these savings. What I can tell you is if you were one of my clients or I had adopted your home loan, you certainly would know your options on a regular basis. Since late 2006, 365 major U.S. lending operations have imploded, and as of this date, there are 16 ailing watch list lenders. The U.S. government owns a majority of over 600 financial institutions. According to the chairwoman of the FDIC on October 13, 2009, bank failures are to continue at a pretty good clip through 2011. Foreclosures reached an all-time high in the third quarter of 2009, up 23% from July to September of this year alone. U.S. consumer trends have been challenging for the better part of the past 2 years. Unemployment has been skyrocketing. Investments in 401ks have fallen quicker than the falls in Niagara, and consumer confidence is way down as well. Personal bankruptcy is up 33%. Mortgage defaults are going up. Revolving debt is at an all-time high. It is certainly understandable that you might have fears of moving forward. And why shouldn't you? After all, your home is arguably the largest asset and liability in your financial portfolio. And that is when is the best of economic times. And as we know, this is not the best of economic times. Goodness gracious, has anyone watched the news lately? You can't hardly turn on a news show without hearing about some sort of economic calamity. Credit crisis, foreclosures, federal bailout, pick your poison seems to be the talk of the day. For the past couple of years, many of us have left our financial statements sealed in their envelopes. We haven't even wanted to look at these documents. Let's take a look at a myth versus a fact today when considering your financial planning. Something I hear so many people say is that they simply cannot do anything with their debt structure. This is so untrue. Today you can't afford not to be educated when it comes to your debt structure. In what can be said as an aligning of the stars and the planets, there are so many reasons to understand your entire debt. This includes all kinds of debt, secured and unsecured, mortgage, credit card, automobile, you name it. There are no tax benefits to owning your home. There are tax benefits to properly structuring a home loan. We may never again see interest rates at the levels they are today. When you think about hiring an attorney or a doctor, if God forbid you or a loved one were sick today with some cancer or needed brain surgery or had some other life-threatening disease, would you be going to the yellow pages to start calling around for the cheapest quote? When you think about hiring a CPA, tax advisor, or financial advisor, are you checking the classified ads to see who has the biggest ad or can write the catchiest headline? Again, maybe the cheapest practitioner, lowest payment plan? These all sound absurd. However, ironically enough, when we were getting involved with arguably the largest financial transaction many of us will ever get involved with, the primary concern is how cheap we can get the services performed. Does this make any sense? I think not. As a trusted advisor, our relationship begins at our first interview, where we are both going to be evaluating each other to see if we have a fit that will match for life. As your trusted advisor, our relationship only grows from day one. Your goals and objectives are monitored and evaluated on a regular basis. With this understanding, you should be able to understand why we do not charge for this adoption and periodic rate watch report. Over the life of our relationship, we certainly will charge a fee for our service. However, that only comes after we have earned our title as your trusted advisor for the debt side of your personal balance sheet. When was the last time you heard from your mortgage planner? In most cases, the mortgage planner is like the guy that sold you your big screen TV. They answer all your questions until you make a purchase decision, and then they are never heard from again. I call this the one-and-done approach. I don't feel there's any room in financial services for the one-and-done approach. In order for you to understand you need a mortgage planner, you need to understand the responsibilities of a mortgage planner. There are 7 main roles of a good mortgage planner. You can see those listed here, but the main issue to understand is this is a lifelong relationship. I have some great news for you. Choosing the right mortgage planner does not cost you a dime. However, the reverse is that you choose the wrong mortgage planner. It can cost you a lot, both in terms of time, potential aggravation, and worst of all, money. If you do not have a mortgage planner, I will be willing to discuss this with you. As I mentioned before, a mutual relationship is key to the success of a long-term program. Once we review all the criteria, then it's time for you to make some decisions. If you want to have lower payments, lower rates, shorter or longer duration, maybe you're stuck in an option ARM program that's going to recast in the next year or so. How can you make a decision without knowing your options? Periodically, we as your mortgage planner will send out a complete report showing you all kinds of options that are available in the marketplace. It is your responsibility to let us know if there are life changes that affect your personal situation. Life changes include paying or saving for college, retirement planning, job transfer, expecting a new baby, maybe grandma's moving in. This is why we will sit down annually for a review of your profile and address any life changes. Although today's rates are quite attractive, your unique goals and objectives will determine the benefits of making a change. In some situations, it's more lucrative to address college financing, home remodeling, or debt consolidation through the mortgage plan. The data shown here is that of one of our clients. In his situation, a program change provided savings of $268 per month. What would you do with an extra $268 per month? Many of us have that Starbucks habit. I have met with people who have a habit as high as $12 per day. Do you understand that reducing your habit by 82 cents per day and applying that to your mortgage, you can take 8.5 years off the time it takes to pay off your mortgage? Most people I speak with don't know this. So again I ask, when was the last time your mortgage had a checkup? If you are one of the millions of American homeowners that has been orphaned by their mortgage professional, you might not know what the market has to offer. While I'm willing to show you what the market has to offer, this means nothing without knowing your unique goals and objectives. As of this date, we have over $47 million in mortgages under management. The first step to understanding if we are meant for each other will require us to get some very basic information from you. This one-page form will allow us to do a quick and basic analysis to see if we are right for each other. If you would like to receive this form, simply send an email to ron@mbehoa.com with a subject of adoption. I welcome any question or comments you might have regarding our services and the mortgage adoption program. Please feel free to distribute this link to anyone you know that has been orphaned. This is Ron Siegel wishing you a great day.